All right, it's 8:05. So I'd just like to introduce myself to get started off. My name is Christian Nieves, founder of an organization called Pipit2profit. We are an educational company that teaches people how to develop their own personal trading strategies in the market, teaching them technical analysis, fundamental analysis, risk management, risk to reward ratios, trading psychology, everything that you guys need to become profitable traders in the Forex markets. If you guys have never heard about us before, make sure to go check out our website at pipit2profit.com. We have a lot of tools, a lot of resources offered to you. You can see some of our results on our results page as well. A lot of amazing content. We also have a bunch of free content for you guys. If you guys have never checked out our website, we have a free podcast for all of you guys to listen to that goes over trading psychology, a bunch of tips to how to manage your money better and become a more consistent, profitable trader. So a bunch of content out there for you guys. If you guys check out our Instagram page at Pipit2profit, we have a bunch of educational content there as well. And we also host these free webinars every single week to help you guys get started and get an idea of how we teach, how we educate our students every single day, every single week on these live markets trading. So let's go ahead and get started. So a lot of people don't understand what it takes to become a consistently profitable trader in the Forex markets. And the reason is that a lot of people are going at this whole thing wrong. So why do people trade on the Forex markets? You can control your risk, your reward 100%. If you only want to risk $1, $5, $10 per trade, you can. You can set all of your parameters in your trading to make sure that you're not risking too much or more than you're comfortable with risking. If you buy a stock and you don't pay attention to the price, you can lose all of the money that you've invested into that stock. Similar with Forex, if you make a trade, you can lose a lot of money. However, the Forex market allows you to create stop orders and take profit orders to make sure to take those profits out of the market and minimize your risk as much as possible. You can trade when the markets go up and when the markets go down. So it doesn't matter whether we're in a bearish market, it doesn't matter whether there's some economic collapse, you can still make money in the Forex markets. You can start trading with little capital using leveraged trading. Some brokers offer to allow you to start trading with as little as $100 trading. Now, obviously, the less capital you have, the less profits you're going to be making. So you got to put that into account. You can't have a $100 account and expect to make millions of dollars overnight. However, you can start trading and make consistent results by managing your risk properly. Also, these are global markets we're talking about. We're not just talking about the New York Stock Exchange. We're not just talking about a company. We're talking about a global market. We're talking about every single country, currency, and economic status is what we're trading on. Markets are open 24 hours a day, 5 days a week, from Sunday 5 p.m. Eastern Time to Friday 5 p.m. Eastern Time, which means that if you work the day shift, then you can trade at night. If you work the night shift, then you can trade during the day. If you work the day and the night shift, you can trade in the middle of the nights in between the day. Whenever you have an hour of time, you can jump on these markets and place trades anytime throughout the day. So there's less time restrictions in these markets. So a lot of people ask because they're not really 100% educated on what trading is. Isn't it gambling? So I just want to give you guys the definition of gambling. Gambling is taking a risky action and hoping of getting a desired result. This is why most traders have this mindset and lose in the markets, because they're trading with a gambling mindset. So they're taking a risky action, placing a trade without being educated and hoping of making money. Now, that's insanity. In order to be profitable in trading, you have to delete this mindset and understand that trading is not gambling if you don't treat it as such. And that's what profitable traders do. They don't treat this like gambling. So if I told you that the markets move naturally, predictably, and you can control and manage your risk, then that definition of gambling does not apply to the foreign exchange market, which is exactly what profitable traders do. They identify the natural and predictable moves in the market that allow you to control, manage your risk, and be profitable over long periods of time. Are you going to win every single trade? No. But if you can be consistently profitable by managing your risk and moving with the natural flow of the market and predictable patterns, then you can easily become profitable trading. Now, it's easily done when you have the proper education and you have the proper knowledge and the proper tools to be able to do so. So let me just give you some of the facts. Markets move in predictable patterns. All right. They react to natural levels in the market where you can buy, where people naturally buy and sell. When something is extremely cheap, a lot of people are going to buy it. When something is extremely expensive, a lot of people are going to sell it. If you have a gold watch and it has no sentimental value to you, you find it on the side of the road, and then you look at the price of gold and it's at $1 per ounce, you're not going to sell it. But then if 6 months later you look at the price of gold and it's $10,000 per ounce of gold, guess what? You're going to sell that watch because it's at an expensive point in the market and you can make a lot of profit on it. This is what traders do. They identify supply and demand zones in the market, and they place trades based on whether people should be buying or selling that currency. All right, traders also choose their level of risk each trade. I cannot choose that for you. You can choose whether you want to risk 1%, 2%, 5%, 50% of your account at once. That's all going to depend on you. But what I will tell you is that profitable traders tend to risk 2% at most of their account or less. All right. Also, with experience and practice, traders are able to find predictable patterns in the market so that these patterns become second nature and they're able to trade these every single day. The only reason a trader will lose in the market is if they're not educated properly. So they don't know technical analysis, they don't know fundamental analysis, they don't know about these predictable patterns, or they know about this stuff and they overtrade and over risk. So they jump into every single trade, maybe even not at the right times, and they also over risk. So they're risking 5, 10, 15, 20% per trade, which then causes psychological issues when you're trying to trade and you see that dollar amount going up and down very fast. And that is what causes traders to close profits too early, to close a loss before you give your trade chance to breathe. And they have that the reason that they do that is because they have that gambler's mentality. So I'm going to show you guys some of these predictable patterns right now. And I'm going to show you guys how you can trade these patterns to be able to make money in the markets. All right. So if I show you guys multiple times within a year's time frame on one currency pair, how there was over 10 different patterns that we could have easily identified and traded, then it proves that the markets are easily predictable and that we can find these trends and patterns in the market and take advantage of them. So right now we're looking at the British pound versus the Australian dollar. All right. We're going to bring this to the daily chart so that we can see some of these moves in the market. All right. So looking at this blue line here, we see that the market had an impulse move to the downside and then had a point when the price started to retrace. Anytime the market has these impulse moves in the market, there's a lot of people, in this case, selling. When the market is going down, people are selling. When the market is going up, people are buying. So when there's a ton of sellers in the market, eventually they start closing their positions, taking profits, and the sellers lose control over the market, and the market naturally pushes up a little bit before continuing in that trend. So when we notice that impulse move and then start seeing the market start to retrace, we've identified a potential pattern. We can go ahead and use the Fibonacci tool right here. This is just one tool, one example of predictable patterns in the market. And we see right here perfectly that we get a 50% Fibonacci retracement. We also see that the market has come back to previous structure. If I draw this black line, you could see that right here, the market bounced up, continued down, and then came right back to that area where price bounced. I told you that price reacts to certain levels all the time, repeatedly over and over and over in the markets. This is another example of that. On top of that, we can see, what if I told you I could tell you exactly where this price was going to next? If we extend this Fibonacci pattern out and we go from blue to blue, we can see that this market was extremely predictable in its move and in its outcome, to where we had this push, this retracement, market started to push down, and after a potential entry point, you would have still been able to capitalize on over 775 pips on that move. That's just in one trade, one predictable pattern. Now we go over here again. Now that was one pattern. Now what if I told you that that the markets continue to do this over and over and over and over again and continue to repeat these patterns. So yeah, Christian, it did it one time. Well, what does that mean anything? Well, I'm going to show you how repeatable this is. Once again, now this pattern ended. What happens next? The market starts to push to the upside. We now see an impulse move to the upside. This trend that was going down is now reversing and it's going to the upside. We see that it came back to that same exact line. I told you price reacts to specific levels over and over and over again. So we use this Fibonacci tool again. Boom. Price came once again to that 50% level. And guess what? It bounced right back up to this 50% level right here, where traders, after an entry point, after we get a confirmation that it's done pushing to the downside, you still would have been able to profit another 799 pips on this trade, 800 pips. Again, right after this move was done, we wait for a push and a retracement, and then look, another 800 pip move right there. Let's continue to do this. More patterns. Let's see. Does this work on shorter term time frames? Yes, I grabbed this pattern from the 4-hour time frame. We see the markets consolidating. We see this important price level right here. Price is failing to break above this level. And guess what? We break to the downside. Now we know that price is pushing to the downside. What are we waiting for? Traders that win don't enter just because they see this impulse move. Because what happens after an impulse move? A retracement. And that's how you get into drawdown. That's how you get your stop losses hit. But we see this retracement right here. Right after, we see another push to the downside. From a potential entry point, actually wait, before we do that, let's do our Fibonacci pattern again to show you how predictable this is. Once again, price came to the 50% Fibonacci level and then bounced all the way down to the 50% and then some to give this potential profits of from an entry point. Again, I'm not telling you from that magical point up there. If we waited for our total confirmations for all of our entry points, 700 pip move again. So it does this over and over and over and over again. Let's show us another pattern on the daily time frame. We see this huge impulse move in the market once again. This time we don't get a 50% retracement. This time we get only a 38.2% retracement. But guess what? Once again, price came back to this zone right here where we see that price created this level of resistance where price did not want to break above. Once price did break above it, it had no choice, literally no choice, but to come down back to that level because price moves in a natural flow and is predictable. So no matter what, price was going to retest this level before continuing back up. Now what do we see? Price comes back down, pushes back up from our potential entry point. Once again, 700 pips in the market on that impulse move. 700 pips. You trade that with a micro lot, that's $70 in profit. You trade that with a mini lot, that's $700 in profit. You trade that with a standard lot, and you're talking about $7,000 in profit on one trade. One trade. Once again, we're going to continue doing this over and over and over again until I show you guys how predictable these markets are. Markets push up again. We see that price is failing to break above this level. We come to this 50% level right here. And you're telling me that once again, it's a coincidence that price pushed right back up to a T to this negative 50% level and also reacted to this same horizontal line that we drew all the way back over here, that it was magnetized back to that exact same level before reversing back down again and then coming back to this same horizontal line right here that we drew all the way from over here. It's not a coincidence. These markets move in natural, predictable, easy patterns that you guys can follow every single day and make profits. Now, this is just the daily chart. Can we trade this on other time frames? Can we trade this on the 4-hour, on the 2-hour, on the 1-hour? These red lines are showing you some examples of areas where the market said the exact same things on lower time frames. 61.8% retracement. We come all the way down to the 61.8% retracement and are able to hit those targets. Once again, right here, price pushed down. We came back to the upside. We get a 78.6% retracement right here. Price starts pushing to the upside. Guess what? Price do you think it just magically came up to this level right here before reversing again? No. Now you're saying, oh, well, Christian, These charts are already printed. You already see the candles. Of course, it's easy to predict. Well, guess what? GBP AUD is currently doing the same exact thing right now. And we're predicting right now that we're going to have, after this impulse move, a retracement, and not just to a random level, back to previous structure. And it's also going to be a significant Fibonacci retracement between 38.2 and 50% probably, and then bounce all the way back down once again into this area, which coincidentally, oh well, guess what? There's a significant pivot point right here as well. So these markets are easily predictable, and most likely I'm going to be taking this trade this week. So keep an eye out, take notes. I told you guys here first, GBP AUD, we're going to have a retracement before the next impulse move to the downside. Why? Because these patterns are predictable. These patterns are predictable and easy to find in the markets. If you do this over and over and over and over again, you're going to be profitable. And we can see over and over and over again, A, B, C, D. These patterns are very predictable, and they do it over and over. That same impulse move on the daily time frame, guess what? There was 2 patterns within that daily time frame to where we got 1 trade from the daily time frame and 2 more trades from the 4-hour chart. We see right here and right here. We can keep drawing these levels over and over and over again. This is why I'm saying experience and repetition, we're going to keep getting the same results. 61.8%. We come right to that 61.8%. Once again, right here, we see that the market makes a floor. We see it has an impulse move. We wait for the retracement. It comes to that 50%. You're telling me once again that it's a coincidence that this 50% line lines up perfectly with this horizontal line that we've drawn from previous levels that the market is magnetized to, and then reverses and reaches back, retests that level before coming back down again, and then coming to a daily natural level before pushing up even higher. It's not a coincidence. These markets are predictable. This isn't gambling. This is just finding the natural flow of the market and following these patterns. It's very, very simple. And this is what we teach. We also teach you when to enter, when to look for entries, where your levels of support and resistance are, how to identify major reversal zones. We teach you all of this throughout our program, along with trading psychology, risk management, how to manage your capital, when to look to start taking profits, when to look to start, securing partial profits, moving your stop losses into profits. We teach you everything that you need to develop a winning strategy trading. All right, guys, at this point, I'm pretty sure I have your guys' confidence that the markets don't just move randomly and that we can predict these movements pretty easily and develop a strategy to become profitable. Yes? If this all made sense, drop a 1 in the chat box so that I know that you guys are understanding. Awesome. I'm getting a lot of 1s. Thank you guys so much. So at this point, we're going to open up this call for Q&As. We have 23 people on this webinar. So I should be getting a ton of questions unless you guys are already experts in the market. I want to hear what questions you guys have, whether it's related to what I just taught you, whether it's completely unrelated. I will answer any questions that you guys have right now. I'll give you guys a chance to type that while I get a drink. What questions do you guys have? Also, if you guys are interested in learning and getting access to our course, please send me a direct message on Instagram, on Telegram, by my email. Everything is Pipit2profit. My email, pipit2profit@gmail.com. Telegram @Pipit2profit. Instagram, Pipit2profit. Facebook, Pipit2profit. Look at whatever social media platform it is, whatever form of communication, message me and I will help you get started so that we can start teaching you these strategies. Besides the patterns, what confirmations do I look for? I told you guys I'm looking for important levels of support and resistance, structures in the market that the market is constantly bouncing off of. So when we go over to especially higher time frames, we can see where markets are constantly bouncing. And you can see that the lines that we've drawn just from those patterns, we can see right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times the market had a significant reaction at that price level. Once again here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We look for these significant levels in the market. The only other thing besides looking for significant levels in the market, identifying patterns, is just looking for price action to show us that price has confirmed our bias and that that pattern is completed. So we're looking for engulfing candles, we're looking for pin bars, we're looking for candlestick patterns, how these candles are closing. Besides that, it's just execution over and over and over and over again. How do I draw the Fibonacci retracements on the chart? It's easy. You go from impulse move, from top to bottom always, and then you see where it lines up. It does not need to be perfect. Either way, these markets are going to work out. Top to bottom, impulse move from bottom to top. If it's an impulse move to the downside, then we're going from the beginning of the impulse move to the end of the impulse move. And over and over and over and over again. Now, you can't just draw Fibonacci retracement tools haphazardly anywhere. You need to identify those important zones, like I told you. You need to follow your strategies, and you need to look at price action and where price is going and identify these zones. What button do I use? We go over here to where we have the Fibonacci tool, and we go to Fibonacci retracement, and then bam, that's how we get our tool. Yes, best indicator is structure, horizontal lines, price action. If you guys cannot understand price action, then you guys are not going to be able to profit. I don't care if you put 5, 10, 15, 100 indicators on your chart. All they're going to do is misguide you into where the market's going. They're all lagging. Every indicator ever created is a lagging indicator. What that means is that it's showing you a line, a graph, a chart, whatever the indicator is, based on previous price action. It's not analyzing what the market is currently doing right now, how the market is currently moving, and it's not showing you all the information that you need to do. Honestly, indicators without price action is going to put you in the wrong direction 100% of the time. How do we learn about price action? Easy. Join our course, and we're going to teach you everything that you guys need to know about price action. We're going to teach you about engulfing candles, candlestick patterns, reversal zones, quarters theory, important psychological levels in the market that these markets are attracted to. None of these are indicators. None of these you're going to go and type up here and say, where are my reversal zones? What's the quarters theory? It's not going to help you. It's not going to have this built-in indicator. You need to learn these things before you guys can become profitable traders. Is a 1 hour closed candlestick rejection on the fib level a good rejection? I think it's a good start. Once we see those rejections, sometimes what I'm also looking for is double confirmations. We're looking for breakout of structures on the lower time frames. There's a bunch of other different things that we're looking for to completely confirm those analysis before we enter into our trades. But yes, a doji candlestick, a large wick candle closing is definitely a good indication of a potential reversal if everything else lines up. If you're lining up with levels of support and resistance, if you're lining up with price action, with structures, as you can see right here. When we see that we have a rejection level right here, price comes back down to that rejection level, closes, and then our next candle closes bullish, we have plenty of room from entering here to continue pushing this trade higher and higher and higher. It's not about grabbing every single trade all the way down here. It's about waiting for your confirmations that the trade is ready to go in that direction and then executing. Any last questions before we go ahead and end this webinar? We gave out a lot of useful information on this call, but there's a lot more that you guys need to learn. So if this was new to you, if you guys don't understand price action, if you guys don't understand structures, if you guys don't understand reversal zones, candlestick patterns, price action, get in touch with me and I will help you guys to become a lot more profitable in your trading. We'll take one more question if we have any more. All right. It looks like we are done with questions, so I'm going to leave you guys off with this. Watch GBP AUD. We see that we're at that significant level that we previously drew in the market. We see that we had an impulse move right here. So what are we expecting? We're expecting a retracement and then to go short on this trade to continue with the overall trend to finish and complete this pattern. Watch out for this, and I'm going to show you guys how predictable these patterns are. I'm telling you guys, by the end of the week, when you see this play out, you're going to understand that, yes, this isn't just me showing you guys after candles were already printed on the charts, that this is real. I'm showing you guys right now that this is going to play out. Price is going to have a retracement at the beginning of this week. And then by the end of the week, we're going to have our next impulse move to the downside. It's going to happen. Why? Because these markets are predictable. All right. So it looks like that is all the time that we have for this call. If you guys have any more questions, if you guys need any help to start becoming more profitable, to start learning these strategies, to start identifying these patterns, send me a direct message today, so that I can start talking with you, working with you, seeing if we are a good fit to start teaching you guys and helping you guys become profitable. Let me know. I am always answering on Instagram, on Telegram, wherever you guys heard about me. Make sure to get back to me and I will help you guys become profitable and start identifying these patterns in the market and learning price action. Thank you guys so much for your time and have a great night.